Hi, and welcome back to Your Future, Your Finances. We're continuing our conversation with Ken Vennick of Equity Mortgage regarding mortgage rates and the changes in interest rates since the election. Welcome back.
Thank you.
For anyone who missed it in the last segment, talk a little bit about the first 2 months here of President-elect and the changes in the administration, what mortgage rates have done.
So right before the election, rates were right around 3.5 to 3.625. And immediately after the election started shooting up, and right now we're sitting at about 4.25%. So it's up a solid half to almost 0.75%, which is a very quick move in the mortgage industry.
That's a big move for the market.
For a short period of time.
Yeah. Still historically low.
Historically, tremendous rates.
Yeah. And then there's a program in the mortgage here about something called HARP.
Yes.
What's HARP?
HARP is a Home Affordable Refinance Program. So those are for folks that bought homes right before the peak, before the market crash back in like 07, 08. The regulations for that is the loan has to be owned by Fannie or Freddie. And most people don't know who owns their mortgage because they're paying one of the big banks, one of the servicers. So that doesn't mean they own it. So it's a quick online look up to see who owns it. And if your mortgage is owned by Fannie or Freddie, it allows you to refinance irregardless of whether or not you're still upside down on your mortgage, meaning you owe more than the house is worth.
Wow.
Still have to qualify income-wise and credit-wise, but it allows folks to refinance even if they have no equity.
And that's still certainly affecting some people, I would
Absolutely.
imagine.
And a lot of people don't know about it. It's for investment properties also. So it doesn't have to be a primary residence.
And then you're saying there's like a newer version or a
streamlined? Along those lines, for folks that have an FHA or a VA loan, they both have similar programs, which are actually less documentation. Those are just mortgage histories and credit scores, basically. No job or credit information. So as long as you're paying your mortgage as agreed and your credit scores are okay, you can do what's called a streamline, which is for FHA, it's called the FHA Streamline, which can lower your rate. And VA, it's called the IRRL, Interest Rate Reduction Loan. And those are both good products. Now, the amount of folks that qualified 2 months ago versus now are about 50%, but there's still some folks out there that they're paying a little bit higher on the FHA and VA loans.
A lot of acronyms in your industry.
Absolutely, yeah.
And then there's another program you and I spoke about where, like, actually, if your income is lower, that benefits your ability to qualify. Why would that be the case?
So the certain financial institutions, it's called the Community Reinvestment Act. They have to put a certain amount of money back into the community. So we've got some incentives with lower pricing to help qualify folks for that program, and those have income limits. Some areas have income limits, some do not. Some of it's just geography. So if it's in certain areas where the state or the government wants reinvestment, they automatically qualify. If it's in other areas, it's going to have an income limit. So therefore, if you've got two owners of the home both working, maybe you qualify just off of one of their incomes and not use the other, and you can certainly use that to take advantage of the little bit lower rate.
And both parties still are
both are still in the loan, right? As long as they're both on the application, and we're running both credits, they're both equally liable. We're just using one job versus both jobs.
Another thing that I hear more and more, people want to build a property. They want to customize it, make it their own. How do they go about, let's say somebody's watching who's interested in that, how do they go about doing that from scratch?
There's two types of construction loans. You've got the ground up construction loan where you're buying the lot and then you're contracting with the builder, and then you go to a financial institution and get a construction loan. So they're going to fund the amount to buy the lot, and then give draws to the builder to build the house until the house is complete. At that point, the loan either converts to permanent financing, or you then turn around and refinance it into a conventional 30-year fixed loan. There's another product through FHA for renovation. So right now, especially a lot of foreclosures or bank-owned properties, there's a lot of potential good deals out there, but people don't want the shag carpet and the 20-year-old appliances. So there's renovation programs through FHA and through conventional means where you can actually buy the house, do renovations, and finance the renovations into the mortgage. And the FHA product is called the 203K, and we do quite a bit of that. So it allows somebody who's potentially getting a real good deal on a home, because maybe it's beat up, but allows them to, as you said, customize it and make it their own.
Yeah. Is there a rule of thumb if you're going into that, like a down payment or a percentage that they're going to want you to have skin in the game for?
Well, the construction loans, the ground up, where you're buying the lot, you're typically going to have to put at least 10 to 15% down. Whereas the renovation...
Which is the value of the lot?
No, it's going to be the full package.
Okay.
The lot plus the construction. So if you're buying the lot for $100, house costs $200, it's going to be 10, 15% of that $300,000. Whereas the FHA product for the renovation is still the 3.5% down on the complete package.
Okay. All right. Well, that does it for this segment. Let us have a website for you.
www.equitymortgagelending.com.
Okay, fantastic. We've been having a conversation with Ken Venick, a friend of the show, about mortgages and interest rates. You're watching Your Future, Your Finances. If you have any questions for the show, email bkuhn, B-K-U-H-N, at psgclarity.com. Thanks for watching.